Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. It was a week where the political theater of the State of the Union and the whispers over that AI scare trade dominated headlines, even as President Trump touted a new era of American energy independence to power the AI boom. A nervous Wall Street held its breath for any sign that the multi-billion-dollar AI hype cycle could be hitting a wall.
The results? Lackluster. Salesforce gave a disappointing sales outlook. Snowflake failed to impress investors. Then came NVIDIA. Despite another bullish quarterly revenue forecast, it actually drew a lukewarm response from investors, signaling that concerns over a potential bubble continue to weigh on the company.
So with the backdrop of the AI trade ahead on our program, we lean on a familiar voice to discuss the race to dominate the semiconductor supply chain. That race no longer your usual suspects, but now include several members, in fact, of the Mag 7. The author of Chip War, The Fight for the World's Most Critical Technology, joins us a little later on.
Plus, you've got that bonus. Now what? Bloomberg Pursuits gives us the smartest ways to spend and invest that yearly check. And it's become less common in menswear in recent years, but Chris Rouser says now is the time to care about belts. He joins us a little later.
I have a love-hate relationship with belts, so I can't wait. I know This is from a man's perspective, but yeah I do.
All right, just Bad Bunny will hook it up. That's what matters.
All of that to come. We begin, though, with the rise of prediction markets. Now, on Tuesday night, while millions tuned into the State of the Union for all of the president's policy talk, or what they hoped would be policy talk, millions of dollars were moving on platforms, including Polymarket and Kalshi, for the prop bets.
While the president spoke of a, quote, national turnaround, traders wagered over $10 million on everything from whether the president would mention China to how many times he'd say America, to the exact count of J.D. Vance's claps.
It's kind of wild.
Yeah, you can't even, you're kind of speechless. I know.
Oh, my God.
Once again.
I know.
Repeat the refrain that we hear over and over again. I cannot believe people bet on this stuff.
But they do.
That's what we hear. That's what we hear. But I believe everything now.
Which is why, as the volume and popularity of these platforms grow, so does the scrutiny, or maybe a little bit more scrutiny. Critics call it unregulated gambling, and where sometimes the truth is whatever the highest bidder says it is. Writing for Bloomberg Businessweek about how Polymarket and Kalshi are gamifying truth is Businessweek contributing writer Chris Beam. Chris's story is the cover story for the March issue of Bloomberg Businessweek magazine.
One reason I was drawn to this topic is that there's so many different ways to come at prediction markets. Yeah. But to me, the most interesting question here was, so these companies, Kalshi, Polymarket, the way they pitch themselves is as sources of truth, that this is going to be, in a world where, we can't agree on what's true, what's real, what's not, deep fakes, what have you. Prediction markets are going to be something that we can trust more than the news, more than pundits. And I was just interested in to what extent that is true. And as it turns out, in a lot of cases, prediction markets can be quite accurate. They're really good at predicting the outcomes of elections, especially large elections. I was going to say 2024,
got it right.
Yeah, and especially at the top of the ballot, scholars have shown that prediction markets are a lot more accurate than polls, less so as you go down the ballot. But I was also interested in the various ways that these prediction markets can be flawed. Right. There can be market manipulation. There can be insider trading. So that's what I wanted to explore.
We want to talk about those flaws, but funnily enough, as they say, we were actually doing a segment on Warner Brothers Discovery earlier, like who's ultimately going to get the deal, and we did go to Polymarket to see. On that, I just want to mention some headlines crossing the Bloomberg terminal because they continue to come. Warner Brothers says Paramount has boosted its bid to $31 a share in cash. So they're confirming the receipt of a revised Paramount proposal. Warner Brothers says the revised bid includes a $7 billion termination fee. And Warner Brothers says Paramount proposal could lead to a superior bid. And we know the Warner Brothers board still recommending the Netflix transaction. So this continues on. So anyway, these are the kind of things, though, that are showing up.
Is there a prediction for when this story ends? Because this has been going on for a long time.
I feel like it just keeps going over new and new bids. You get into, though, the fraud aspect. And I think we are thinking about people who are maybe, creating a bid or something and has some control over the outcome. That's a real issue.
Absolutely. There's a lot of markets, especially we can get into some of the differences between Kalshi and Polymarket.
There are differences, right?
There are huge differences. Kalshi is entirely U.S. based. It's regulated by the CFTC. So every market that they post needs to be at least run by the CFTC for approval. Whereas Polymarket, most of their activity is overseas, and so it's not regulated by the CFTC. So when you hear about some of the fringier markets out there, like, will Jesus return in 2026? Will the U.S. discover aliens in 2026?
Wait, this is fringy? Wait! Only kidding.
Depends.
We are getting some release from the White House, my understanding, when it comes to aliens, but that's another story. But go ahead.
Yeah, I mean, those kinds of markets tend to be more on Polymarket because they would not pass muster with the CFTC.
Does it make, though, the other stuff that's on the, any less real? I don't know. I don't even know how to, how do you gauge the credibility of what's
the credibility
here?
Of what? Like if Jesus is back, or what?
So part of the
is it just a game?
Yeah, I would say.
Is there any real information? Are there people who know what the outcome? And this goes back to.
There's a spectrum of markets here, so. You'll not be surprised to learn that these companies, Kalshi, Polymarket, they like to emphasize the more serious markets where you can predict the outcome of elections, or you can predict what inflation is going to be, or what the Fed is going to do next quarter. And they argue that those markets actually can provide useful predictive information to help people make decisions in the world. That's one end of the spectrum. The other end of the spectrum is much more kind of almost entertainment, like predicting whether aliens are going to appear.
Well, there's also the sports betting part of this, or maybe predicting outcomes of sporting events. I don't want to say betting because I don't know if it is betting, but you have told me in the past that in reporting this story, you did place a bet on one of these, right, for the Patriots?
Yeah. Which turned out to be a huge mistake. But yes, this is... So the vast majority of the activity that happens on Kalshi is sports betting. And I think it's okay to use that word. Something like 80 or 90% of Kalshi is sports. Polymarket, 100% of its U.S. activity is sports focused. Overseas is a different story.
So 100% of what you see on Polymarket in the U.S. is sports focused.
Correct.
Okay.
Because those are the only markets they've gotten approved by the CFTC.
So then, why are people using that instead of FanDuel or DraftKings?
Part of it is just the interface is a lot simpler. Like if you go onto FanDuel or DraftKings, there's a lot of complex measurements, and you have to know what a spread is, and it gives you the options to parlay different bets within a football game. Whereas with Kalshi or Polymarket, it's very simple. It's, do you think this team is going to win or not? Yeah. And you can make more complex bets, but it's a lot more user friendly.
You earlier referenced, and we'll talk about mentioned markets in a few minutes, but you earlier referenced the accuracy of these, especially at the top of the ballot in the scholarly articles that have cited this as being more accurate than polling. Why is that? Is it because, as proponents say, people are putting money where their mouth is?
And that was kind of to my question, what is the...
what's unique about
what's the value? And do they really have some insight that is valuable? Because it was pretty remarkable in some of the elections, right?
Yeah, I think what it comes down to is polling and prediction markets are just completely different ways of collecting information. Polling, you're asking people what their personal opinion is, and polling, especially in the last decade or two, has in some ways gotten worse and worse because of cell phones and who responds and who doesn't. Whereas prediction markets, you're asking a different question. You're asking them, regardless of your opinion of who should win an election, what is going to happen? What do you think other people are going to do? And so really, the idea is that you're aggregating information like any market, but here you're aggregating different pieces of understanding about the election and how it'll play out.
As you speak about this, I'm thinking to a site like Wikipedia that uses the wisdom of the crowd, supposedly. This is also supposed to use the wisdom of the crowd, but Wikipedia gets in trouble for bias. Is it possible to have bias in prediction markets?
Yes is the short answer. And the smaller the market, the more risk there is for bias. Like a couple years ago, when these markets were very small, some academics went onto a few election markets and placed bets, and that skewed the results. And as a result, they said, this proves that these markets are not reliable. But as they've gotten bigger and bigger, the presidential market for the election of 2024 was, millions and millions of dollars. That potential for manipulation has been greatly reduced.
We're talking with Chris Beam, contributor for Bloomberg Businessweek, here in our Bloomberg Interactive Broker studio. This is on the Bloomberg Businessweek cover story, his cover story on how prediction markets, Polymarket, and Kalshi are gamifying the truth. Do they need to be regulated? Does there need to be oversight? Because are people, you can make money. So are people gaming the system potentially?
Yeah, there is regulation already.
You're right. You did say there was. Forgive me. Yes.
So the CFTC currently has authority over derivatives trading, and technically these are called event contracts. So that's a type of derivative.
Right.
So the CFTC is in charge of what contracts are allowed and what are not. As you might know, there's this huge debate over whether the states should regulate these prediction markets as gambling, and that would be much tighter. It would probably mean taxing them a lot more than they are currently.
Yeah, I mean, because to be fair, the gambling platforms, the traditional ones, are taxed in a way that these aren't taxed for sports betting, right?
Yeah. I think when you bet on Polymarket or Kalshi, it's taxed as just regular income.
So let's just briefly mention markets. I love the way the piece opens, talking about this, what happened with Jerome Powell and this mention markets around Jerome Powell. That's sort of our audience. Explain what happened with the utterance of a word by mistake.
We only have, unfortunately, about a minute or so.
Oh, sure. So, people know that every word that Jerome Powell says in a speech can move markets. But in this case, you have traders on Polymarket and Kalshi watching a speech, paying attention to literally what words will come out of his mouth. And so, you had people betting that he was going to say the word renovation because they thought he might be talking about the DOJ investigation. It turns out he did end up saying it, but a lot of people didn't realize it until after the fact. So there was this whole debate. Did he actually say the word? Which reveals one of the problems that comes up with these markets, which is it can often be hard to tell what the actual factual outcome is.
Chris Beam, he's a contributor for Bloomberg Businessweek. It's the cover story. It's the big take. It's one of the most read stories. It's all about prediction markets. We barely scratched the surface. Everybody should check it out on the Bloomberg Terminal.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
It's arguably the fundamental building block of the 2026 economy. We're talking about the semiconductor. Well, it's kind of been, I feel like, the fundamental building block for a long time. Everything, it seems, has some kind of chip in it. All right, well, this past week, Meta shook the semiconductor world with a multi-billion-dollar deal to buy 6 gigawatts of AI power from AMD, Advanced Micro Devices. This comes just days after Meta doubled down on its partnership with NVIDIA. The message is clear. If you don't own chips, you don't own the future.
Someone who knows the chip industry well is Chris Miller. He's professor at the Fletcher School at Tufts University, as well as a non-resident senior fellow at the American Enterprise Institute. He's also the author of the book on chips, the New York Times bestseller Chip War: The Fight for the World's Most Critical Technology. Chris, it's good to have you back with us. Carol and I were just talking, and you wrote this book close to 4 years ago at this point. How different is the world of semiconductors and the world's reliance on semiconductors now than when you wrote the book?
Well, I think the key difference is just the scale of spending that we've got right now on building data centers and buying all of the chips that are required inside of them. NVIDIA first and foremost, but not only. We've seen companies transformed by the data center build out. But in a lot of ways, not much has changed other than that. We're still sourcing our key semiconductors from Asia and above all from Taiwan. And so the industry is supercharged its size, growing faster than ever, but dealing with some of the same supply chain choke points that it had a decade ago.
You know, we talk a lot with one of our brilliant voices on the chip world, and that is our own Ian King, who has seen a lot of cycles, the ups, the downs. And we talk a lot about that supply-demand imbalance and what happens when there's a lot of demand, there's not enough supply, the build-out continues, the investment, supply goes up, and then there's a glut. So I'm just curious what your view is when it comes to the cyclical nature of the semiconductor world. Has AI changed it, or we will see also an overbuild, an oversupply, and then a glut?
I think if you look historically, certainly you see cycles up, cycles down, but there are moments when you see step changes in terms of demand for certain types of chips. We saw that with smartphones, for example. There was no demand for smartphone chips, and then now everyone needs a new smartphone every couple of years. And what we're seeing in AI right now is that type of step change, a huge increase in just the baseline amount of chips that we're going to need for data centers driven by AI. And so I think we shouldn't expect cycles to be over. Certainly there'll be ups and downs in the future, but it's now very clear, I think, that we're just going to need a lot more compute for AI purposes in the future. And as a result, we'll need a lot more of the AI chips that go inside of data centers.
In your view, is the promise that many people think AI is supposed to deliver, will it actually be delivered? Like, what's the future that you envision after all this CapEx is spent?
Well, I think it's in some ways funny when we ask, will AI deliver? Because if you look just 3 years ago, even after ChatGPT was released, there are so many things that were not possible that are possible today, whether it's the number or the scale of hallucinations and answers that chatbots give you, or the scale of work that you can put together today that just wasn't possible in the past. We've already had so much new capability generated just in the couple of years since ChatGPT that in some ways I think it's an absurd question to ask, will AI deliver? It already has in a lot of ways. But I think I understand why there's plenty of questions about what about the investment that's happening right now? Will that investment pay off? And I think there are reasons to think carefully about how much each company is putting in over what time horizon. But I guess when I zoom out, I ask myself, do I want a world in which there's more access to compute or less? And it seems to me that we should, rather than being concerned that there's too much compute being put in the ground, be excited that there's actually companies willing to invest in the infrastructure that's going to deliver all of these capabilities. Well,
I think it's an important question to ask for a few reasons. And one of those is because if you look at just the CapEx that these companies are spending, you know, one company, $200 billion in a single year, that's a big commitment. And that's something that they have to convince investors that is money that is going to the right place. That's money that has to be earned back plus on companies coming to a hyperscaler and saying, yes, we think that this money is not only being well spent, but then we can use this compute to actually create a product that will provide a return on investment. So yes, we've seen a lot of the hyperscalers benefit, the Anthropics and the OpenAIs and the Mistrals, like that's amazing stuff. But at the end of the day, there are a lot of companies that are not necessarily technology companies that maybe aren't yet necessarily seeing an increase in productivity as a result of these tools. So my question is, do those companies start to see that? Do we live in a world where this is a layer, just like the internet was a layer of technology?
I think there's no doubt that we're going to have AI as a layer that's embedded into all technology that we use. And when I look at the economic question, I say, first off, is it profitable to serve AI systems today? Not train the next generation, but serve today's. And if you listen to what's publicly reported about OpenAI or Anthropic, their margins on their inference business are not just positive, but quite good. And so that, I think, is pretty strong evidence that the delivery of already existing AI services is a pretty profitable business. The next question is, should we be investing in R&D in the next generation, which is, of course, very, very expensive. But I think it's hard to argue we should dramatically slow down R&D in AI, just given all of the extraordinary improvements that we've seen over the past couple of years in terms of capability. And so when you start breaking it down and ask, well, which specific investment do we think is excessive? Which specific investment would we rather not be doing? Would you really like to be the CEO of the only big tech company that's not investing in AI? That doesn't seem like a very comfortable place to be. And I'd rather have a situation in which the big technology companies are investing more rather than putting money in the bank or buying back their stock because they didn't have any profitable investment opportunities.
Well, I would say Apple's doing it differently, and I guess time will tell whether or not their approach works out. Chris, I am curious to, who do you talk to? What research do you follow? What are the leading voices? What are the leading companies that you watch to figure out kind of how the semiconductor space is evolving? I mean, we still know TSMC is still the big manufacturer of all chips in the world, and there's geopolitical tensions to that. But give us an idea of where do you think kind of investors and just the world at large need to be focusing their attention on when it comes to the semiconductor world? Is it NVIDIA? Is it China? Is it something else?
I think the hard problem is that it's all of the above, and we've seen this play out in the GPU supply chain over the past couple of years, where we've had shortages in different types of components, different materials, and the memory chips that go next to GPUs and AI servers. Each part of the supply chain has had to dramatically ramp up its production capacity to respond to this surge in demand. And so if you only look at one part of the supply chain, you miss the challenges that other parts are often facing. And so it's the chip designers, it's the chip makers, but it's also the materials suppliers, which are often not even thought of as being semiconductor firms, but produce many of the capabilities that are critical to actually manufacture the AI chips and servers that we need.
Do you think the world, or do you think the U.S. specifically does need to be restricting sales of its most sophisticated chips to China or on others? I mean, we did see NVIDIA, they still face some uncertainty in China. That's their largest market. Or which it is the largest market for chips, the government granting some licenses to ship a small amount of some of its processors to customers there. But NVIDIA is not sure if the Chinese government will give its approval. So there's still some back and forth here. But is it still an arms race of sorts?
Well,
arms race of sorts, excuse me. Yeah.
I think arms race is not a bad analogy. And when you listen to tech CEOs, they'll speak in the same language. They're struggling to get access to all the computing power that they need, that they envision needing more tomorrow than they've got today. And if you listen to Chinese technology leaders, what you'll hear from them is challenges in getting access to computing power. And the primary reason they've struggled to deploy AI products at scale is because they've struggled to get access to all of the computing capabilities. And it's on a regular basis. We see new Chinese models launched that can actually be deployed at scale because they don't have access to the advanced chips that they need. And so this does, I think, seem to me that this is still a very powerful card that the U.S. has to play. And so I think we should be very careful or on any decisions to give China more access, or at least make sure that we're getting something in exchange for that.
On that, Chris, the U.S. support of TSMC and the U.S. support of Intel, different types of support, and I guess you could call the TSMC one encouragement to build here in the United States. What is the right industrial policy to reduce reliance on companies outside of the U.S.?
Well, it's a really hard problem because TSMC is such a capable and efficient manufacturer in their home base in Taiwan. But I think the U.S. government is right to say that we need a more diversified manufacturing base for the world's most important semiconductors. I think we've learned over the last couple of years there's no silver bullet. President Trump's tried tariffs. That comes with obvious downside. President Biden tried subsidies. That worked to a degree, but only to a degree. Here's the reality. The chip industry has involved hundreds of billions of dollars of capex over the last several decades. And so it's just not going to move fast. And so if you want to slowly change the structure of where chips are produced, you've got to plan for years of implementation of measures designed to shift the economics of the chip industry.
All right, going to leave it there. Chris Miller, thank you so much. Good to check in with you. Professor of International History at the Fletcher School at Tufts University, author of Chipboard, joining us.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, it's bonus season, at least for the lucky few on Wall Street and across a lot of corporate America. For some, though, it is a moment of relief. For others, a burning hole waiting to be spent. I don't know. What? You're shaking your head. What?
Yeah. To be one of those. Sounds great. The question isn't just how much you got, it's what you do with it. For more on how to spend and invest your bonus this year, Bloomberg Pursuit's editor-at-large, Chris Rouser. Chris, we're going to talk about how to spend and how to invest your bonus. But maybe we should start with buying a belt. Because
it's a good investment.
I want to start with that. Is that okay with you, Carol?
Yeah. I mean, listen,
you can't get enough of this story.
I've been chuckling through this. This is another table read story.
Wow. So I love this because, we're still talking about the Super Bowl and the Super Bowl's halftime show. Yeah. And your focus wasn't on the people who were grass or maybe who showed up or what wagers were made, who actually performed. No.
Yeah.
It's about what Bad Bunny wore.
Oh, yeah.
The humble belt.
Specifically his belt.
I'm laughing.
Why are you already laughing?
This is really funny.
Okay.
All right, go ahead. Talk about the belt.
Bad Bunny's belt is not funny. I mean, Bad Bunny, he had he had a great, wildly proportioned outfit from Zara. And at one point he wore a straw hat, a farmer's hat. But the thing that I kept looking at his outfit was his belt, which was a very, very simple rope belt.
Yeah.
It was a Jabaro style belt, which was like in honor of Puerto Rican farmers, which is why there were people there dressed as grass and why he and the dancers wore farmers' hats at the beginning.
And just to set the record, I'm not laughing at any of that because I loved the homage to culture.
Yeah.
It was super impactful. The way you write. There's a mom and dad reference that I really love, but go ahead.
Okay.
Well, so I am staring at this belt, and then I was like, when was the last time I looked at a belt or like even thought about someone's belt or someone's belt? Like the Bad Bunny wore that belt because he was like, this culture is what ties us all together. And I was like, that's such a great message. When was the last time a belt had a message? And actually, belts are like under attack, guys.
Why?
What do you mean?
They're like in menswear.
Do you have a belt on?
I'm not wearing a belt.
Do you have a belt on?
I always wear a belt.
Oh, yeah, you do always have a belt. Okay.
No.
How else am I going to keep my pants up? Suspenders?
Right.
Hey, my husband used to wear suspenders, so watch it, buddy.
So the thing in menswear these days is like a silhouette where your pants are huge. They got pleats or 2 pleats or 10 pleats, and they're flowy, but you don't wear a belt. And they're like long tab trousers that don't even have belt loops. Maybe they're Gurkha pants like I am wearing right now, which are so difficult to get out of. It requires a bridesmaid. And until very recently, I had to wear a belt so that my pants didn't fall off.
Seriously?
I don't know about. I mean, I feel like that's what Tim is saying.
Yeah, that's what I'm saying.
I would see all this styling on the runway, and in you go to like the Ralph Lauren website or the Todd Snyder website, like none of the models are wearing belts. They're tucking sweaters into pants without belts. I'm like, how does that even, what?
Just doesn't, to me, it doesn't look right.
My dad was a belt. He had belts, multiple belts.
And I was like, I'm on a mission now to figure out what's going on with belts.
So what did you find out?
Well, so the silhouettes for menswear are very much for the past 5 years have been kind of belt-less, low belt. But then I went to Pitti Uomo, which is this menswear show that happens every year in January. It happens twice a year, but it's in Florence, and it's in this old fortress, and it's got literally hundreds of menswear designers, craftsmen. They've got people who make umbrellas and watches and jackets, and it is like a show of force of trying to make men beautiful, which was kind of overwhelming to be there for the first time. And there were so many beautiful belts.
Like what?
Well, in Europe, there's so many great leather craftsmen in a way that we don't really have in the United States.
Yeah.
And there's like these Edelweiss belts from Switzerland. There's incredible Italian belts, obviously.
Yeah.
And there were so many belts that were inspired by America. And now, to me, in America, the belt is something that when you go to the department store, you're like, you have two things in your mind, brown or black.
Yeah. I don't have any belt that's not brown or black.
Right. Or maybe you're thinking, I forgot to put one in my gym bag and I have 7 minutes to buy a belt.
What about those like court or canvas one?
And as I say in the story, I sort of, in my mind, like in America, if you give someone a belt as a gift, it means you've given up trying. You're like, I'm not.
So with this,
it's like giving a wallet. You're like, I can't think of anything. I'm just going to get you a belt.
To me, you said to me, you giving a belt to your dad for Christmas is like giving a robe to your mom.
Yes.
It's so true. Like
with that great SNL sketch.
We've all been there. Yes.
And you're like, oh, a belt, thanks. Yeah. But actually, because Western wear is such a big thing, which is partially thanks to Beyonce, it's partially thanks to Pharrell had this amazing cowboy and Native American-inspired show at Louis Vuitton. Like, Western wear is actually really huge, and it's like very globally influential. And so it was so cool to be, for me, like the person who's like, American belts are so dumb, to go to Europe and just see so many beautiful American-inspired belts, Native American belts. Brunello Cucinelli, who's like the most fashionable man on planet Earth.
Where's the belt?
Where's a belt? Was like, you don't wear a belt, I wear a belt. You don't get to accessorize. Like, I only get a watch. I don't go wear jewelry. I have to wear a belt. And his collection this year had American-inspired sort of Western wear belts with silver and turquoise. And I just was like really turned around and I was like, the belt has a future.
Yeah.
The belts, the American belt specifically, is having a moment and is going to get bigger and bigger.
So that's your prediction, even though on the runway we're not necessarily seeing. I mean, even like there's a picture of rag and bone jeans in your story, and a guy wearing those without a belt, and that to me looks naked.
Can you imagine wearing jeans without a belt?
I would. If I don't, it feels like you're missing something. Like
we're
you forgot
not all
something.
Ilya Rozanov from Heated Rivalry. We cannot all just like our pants don't all like perch. You know, like you got some people need a belt.
Chris Rouser, you're a gift. No, but it's interesting. Like, I know this is about guys and stuff, but I too, like, I've gone through periods of buying lots of belts, thick belts, like, and then I've whittled them down because I just don't wear them. And then there's always a few like I want to hang on to because I do pull them out.
Yeah, and women's wear for the past couple of years, belts have been huge. Like, there have been like double belts and like trompe l'oeil belts that are fake, and like Elsa Schiaparelli had like models with like 8 belts, and now men's wear is getting into like having a lot of cool belts coming back in.
All right, well,
maybe you can use that bonus check to buy a belt.
Yes.
How's that for a transition?
Buy an expressive belt. That's the idea. Like, buy something that tells the world about you or about your culture or about like what you want to say. Like, make it like a watch or a brooch or something that you can.
There's a lot in this piece, and we're not going to be able to get to all of it. They get into how our bonus is taxed, how to save and invest your bonus.
You've moved on from belts.
And then how to...
Right?
Okay.
So and then, belts.
Yeah. Moving on, kids. And then what are the best things to spend a bonus on?
Should we do spending? I think we should do spending.
Because the taxing...
I will say, we're going to skip this. The taxing part is really interesting.
And smart. Everybody should read it.
Everybody should read it because I think a lot of people are... I've always been confused about why taxes look different on bonuses.
Yep.
And if you read it on the terminal or at Bloomberg.com, just click on this yellow thing and it takes you right to the tax part. But anyway, let's get to the fun stuff like buying a Corvette.
Yeah, this guide is great because you can sort for like what you want to learn about. And like if you want to learn about giving back or investing, you can sort of just click the button. It'll take you right to that part. My part was...
Chris, you don't need to tell us your part. As I was reading this, I knew exactly what you contributed.
It was not...
He did the tax implications.
No, Chris did watches.
The donor advised funds.
No, there are donor advised funds in there.
There are. Yeah. Also informative.
Okay, sorry, Chris, go ahead.
So if you're going to splurge, by the time you get to my part, it's like, okay, you've spent your money on like the helpful stuff. Now you're just going to blow it. One of my favorite things was these like crazy private jet journeys at Abercrombie and Kent, which is an amazing outfitter. They do them all over the world, but they do these ones in South America where you go to Colombia, Peru, and Brazil, and you go through these great, amazing waterways like the Pantanal. And so you're on a boat in like the Amazon, then you get on a plane, you fly to a different country, and then you go on a boat in a different place, and you see pink dolphins, you see huge anteaters. So that's $59,000 a person. That's very expensive.
But it's 3 weeks, right? 3 weeks?
I think it's 2 weeks.
Oh, okay.
And but it's the kind of
at 3 weeks it was a bargain.
It's a deal.
I feel like you guys are like me in that like you need to get outside sometimes.
Yeah.
And sometimes if you go somewhere huge, like a mountain or you're out on the ocean or something, you're like, oh wow, my stuff doesn't matter as much. I recommend a Patek Philippe annual calendar moon phase.
Oh, you do?
That came out last year.
Yeah. Okay.
This is a good one because normally there's a lot of watches that you go into a Patek and you like actually can't get them because there's like a wait list. But this one is a very important watch at Patek, but you can actually get it because it's just like not as cool right now.
Okay.
So that's $66,000.
I was going to say, what's the okay,
is there
so
like a Swatch version of a Patek?
That's the after tax.
Yeah, Swatch.
That's actually I'm surprised that it's
Swatches.
66. I thought Pateks were a little more expensive, but
They can be.
okay, that's
If you want something that's going to get you 12 months of personal joy, Softwave is this incredible new facial treatment.
Have you used this?
I have not.
Okay.
But several people here at Bloomberg have.
Okay.
So we can talk about it.
I love this stuff, the skincare stuff.
They basically they sort of zap the collagen layer under your skin, and for 12 months, it just tightens up your skin because it basically does like low level injury underneath on the like underdermis. It's about $3,000, and people swear by it, and I would like to do it, and I think I may.
Okay.
And then, one thing that I got for myself, which is actually not expensive at all, is this card.
You did do this?
Yes, the Bloom.
Okay.
Which is like stainless steel key card. It's $59, and it's basically like a thing that blocks apps on your phone.
these things are having such a moment.
Yeah. There's one called Brick where
Yeah.
like you have a brick on your fridge and you have to go like walk into another room if you want to use the app that
What
you
it does
blocked.
is it creates friction.
Yes,
so then
exactly.
it's like you're not just automatically like instinctively grabbing an app. But go ahead.
Right, yeah.
yeah.
And the phone has built-in stuff where it's like you have time limits and then a little thing pops up and it's like, you've been on Instagram for an hour and a half, Chris. What are you doing? And then
I'm looking at
and
belts.
It's very easy to be like, okay, bypass. But if you have the Bloom, which is a stainless steel card that you can keep in your wallet or a drawer or another room, that level of friction for me actually does prevent. That does like, I'm like,
does.
okay, bad boy, come on, like stop.
Did it permanently change your habits?
I just started doing it like a month ago.
We should do something bigger on this.
Yeah, I
This
agree.
is like, I just think this is a huge part of wellness moving forward. And it's our understanding of technology and the implications of technology, regardless of what you're doing on your phone.
And
It's like-
recognizing that it's addictive. It's an addictive
Yeah.
substance. And like if you think that like you're going to fix this on your own just through willpower, you're wrong because
Yeah.
it's built to beat you. So like, we got to figure out other ways.
Part of a bigger action, I think, of like also parents buying dumb phones for kids instead of smartphones,
yes.
right? Like
Yeah.
you're seeing it kind of happen.
You're going to do it, Chris.
All right, there's
I
a
know
chat
you're
here.
gonna do it.
There's a chat here. Chris Rouser, yeah, as I said, mwah, love. This is really fun.
That was Chris Rouser, Bloomberg Pursuits editor at large.
And that wraps up our weekend edition of Bloomberg Businessweek from Bloomberg Radio. Thank you so much for joining us.
Be sure to tune into Bloomberg Businessweek Monday through Friday starting at 2 p.m. Wall Street time on Bloomberg Radio and Bloomberg TV. Also on Sirius XM channel 121.
You can also watch our daily broadcast on YouTube. Just search Bloomberg Podcasts. We're simulcast on Bloomberg Originals, available on Bloomberg.com/originals and streaming platforms, including Roku, Amazon Fire TV, Samsung TV Plus, and more.
I'm Tim Stenovec.
And I'm Carol Massar. Have a good and safe weekend, everyone. Check out some belts. Stay with us. Today's top stories. Are you laughing? He's laughing.
Of course he's laughing.
I want you to check out those. I agree. Cosign.
Stay with us, everybody. Today's top stories and global business headlines are coming up right now.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.